Hi, everybody. Welcome to today's webinar. I'm Nicole Sienna, the VP of Studio for Red Cloud Financial Services, and I'm going to be the moderator for today's webinar. We're here with Steve Cope, President, CEO, and Director of Silver Viper. Hi, Steve.
Hey, Nicole. How's it going?
Good, thank you. I'm glad to see you virtually today. Just a reminder to all the folks on the live audience, there is a chat function on your screen. So as we go through today's webinar, please feel free to type in your questions as we go along. We'll have a Q&A session at the very end. So all of that being said, Steve, I'll give you the stage and let you take it off.
Yeah, thanks, Nicole. And thanks, everyone, for taking time to get the update on Silver Viper. There's a lot going on with the company right now, and we're working on various different things, and we'll touch on those, quickly as we go through the deck today, and then hopefully have some active Q&A. I think we get a lot more, diving into detail on that oftentimes than even just going through the deck. But we'll go through a quick overrun of the company. I will be making forward-looking statements today on a number of different topics, but there's your disclosure slide to cover that off. Why invest in Silver Viper Minerals? One, we've got a high-quality asset in La Virginia. We've come out with a maiden resource on that project that's just a starting resource. It's already a very attractive resource for open pit heap leach mining in the state of Sonora, but it is just a start. We've expanded the zone where the bulk of that resource is at El Ruby by another 300 meters already. We plan on expanding it to the north and at depth and starting to develop an underground resource. So again, we've already got a great starting point, high-quality asset. As I said, we're going to be looking to expand that. And beyond just expanding El Ruby, for the last few months, we've been doing a lot of mapping and sampling, and it's opened our eyes to a number of new target areas that we fully expect, on at least a couple of them, to make brand new discoveries and then start to delineate a resource of those the same way we did with El Ruby. We've just recently announced an LOI to acquire Canasil Resources. Now that takes us from a single asset company to start with, to having 10 assets, 6 in Mexico and 4 in Canada, and gives us the optionality to, do non-dilutive transactions, whether it's doing joint ventures on those projects, optioning out directly, working them ourselves, acquiring NSRs and then selling an NSRs as a package. As we've seen, the premiums on those have never been higher in the industry. It gives us a lot of optionality as we continue to move forward. We expect to be announcing a final deal on that soon. We're just, finishing off our due diligence. And then you have a strong management shareholder group behind it. We have our combined technical team within the Belcara group, which Silver Viper sits in, has over 150 years experience in the field. We have a large institutional investor base. Over 60% of our shares are held institutionally between about 20 different funds. And then you've got management and the board, owning collectively around 20% of the company. These are all boxes that I think certainly make Silver Viper very attractive. And if there was a fifth box right now, and a lot of companies in the industry can say it, but they can't check off the first 4, is that, as an industry, most companies are trading around their all-time lows or certainly year lows. And it's created a great opportunity for those with capital to be able to deploy it into companies that, as we saw in 2020, as we saw in the last cycles, rebound very quickly. And as you can see right now, metals prices have been trending certainly in the right direction for the last month. So again, I think it is an excellent time to be looking at any of these exploration and precious metal stories with expectations of very large returns as you move forward and we get into a better market. The terms of the Canasil deal are very straightforward. It's just a simple 4-to-1 merger. For every 4 shares of Canasil, you get 1 share of Silver Viper. As part of the deal, we do have to do a placement, and we're in the middle of working on that placement right now, but we have to raise, a minimum of $1 million in a placement. There's a break fee associated if someone comes over the top. Right now, that fee would be $500,000. After we sign a definitive agreement, it goes up to $2 million. Like you say, we're just finalizing our due diligence as we move forward, and then we'll be looking to sign the definitive agreement. I mean, as we already said, this does provide benefits for both groups of shareholders. Canasil has always been a company that has had fantastic assets, but they've never been able to build the traction behind some of the very good results they've had on a number of those projects. For us, Silver Viper, it takes us and gives us this diversified portfolio, and it gives us the optionality of, looking at all these different projects and deciding which is the best method forward on all of them. And it gives us, in the case of the Esperanza project, that's something that you could have a maiden resource on in fairly short order. You have the back end of the Nora discovery and being able to run the second program on that project to back up the fantastic results they've already had there. You get some other projects, and all these projects are right in the heart of the silver belt in Mexico, next to, you know, the largest silver mines in the country. And so you've got a good jurisdiction with the right real estate, and, you know, and frankly, a number of them, like I said, have very good results already. So what the capital structure would look like after the deal on that 4-to-1 merger. So again, we're still going to be sitting there with not too many shares outstanding at 137.5 million. Again, you can see some of our institutional shareholders there that we mentioned, and then like I said, there's around 20 different funds that own the stock. You know, Kobe at Red Cloud's got a $1.10 target on the company. Again, you can go to his research and look at it, but that's pretty attractive to a company that's currently trading just under 20 cents. You know, it's already, there's a, you know, independent analyst that, you know, has looked at this, and that, he has said, I believe, factors in the dilution of the deal. It doesn't factor in the assets yet. So I would expect as we move into a better market, that target price would increase as well. But that's obviously up to the analyst. Here's a sampling of, well, these are the 6 Mexican assets. And again, you can see on the map where they're located. Again, you're looking at some of the, you know, most prominent mines in Mexico. In the case of Esperanza, you're very close to La Colorada, which in my opinion now is the greatest deposit in Mexico. It's got a fully intact skarn system below their precious metal system, and we have the same potential at Esperanza. You know, they've hit gold, silver with lead and zinc up high, but there is very much the potential for that same skarn system to be intact below it. So you've got, you know, 11,000 or 11,500 meters of drilling already done on the project that have hit some very good grades and widths, and the potential for that to be a world-class deposit. So that one is one that you can add a lot of value quick. Nora, the discovery, I mean, you did just over 3,000 meters on that project and started hitting some of the results that you can see there. 11.5 meters of almost 750 silver equivalent, just split between gold and silver, or 1.5 meters of, you know, 3 kilograms of silver equivalent. You know, these are very good results, and they were never able to follow up on them. And they were done recently in 2020 and 2021. So again, a very attractive project, and one that we followed very closely because we originally, prior to that drilling, wanted to list Silver Viper on the Nora project. You've got Vizcaíno in a great jurisdiction, never been drilled, and we've been told, you know, there's already a mining company that's interested in that and has, you know, potentially has a deal in place to option that project. Salamandra, we mentioned, very attractive. Calibri's got some very nice results, you know, high-grade copper with silver and zinc. So again, it gives us a lot of different optionality. And then you have the 4 Canadian projects as well that are sitting in gold, copper, porphyry country up, you know, just east of the Triangle in BC, around the Chemist deposit. So again, a very attractive jurisdiction. That being said, our main focus will always be La Virginia, or may not always be, but right now it's certainly La Virginia. You know, this is where we've had our most success. We've made our discovery, have the ability to grow and expand and you know, develop this into a project that the major miners are going to be interested in. You know, we've paused drilling here for the last few months and really focused on mapping and sampling. You know, that has, like I said, opened our eyes to a number of different exploration targets. Number one right now would be the southern portion of El Molino. You know, our high-grade structures are these breccia structures, and what we see in that El Molino area is very tightly spaced breccias in sequence, one after another. And that's, like you said, that's where our high grade is at El Ruby. It's sitting in the breccia structure. And then at El Ruby, we get into the footwall where we get our broad lower grade disseminated mineralization. You know, it's 20 to 80 meters wide. And then 100 meters to the west, we get the western zone, which is 100 meters wide of that same, you know, broadly disseminated lower grade, but very good grades for open pit heap leach mining. And that's what really made El Ruby special, and is made this discovery the centerpiece of this project. So we're hoping to find more El Rubies around while we also continue to expand El Ruby, but El Molino is definitely one of those key areas that we focused on. Macho Libre, if you just saw a release on some of the mapping and sampling that we had done, we had some extremely high grades out of the El Oriental portion of the project, which would sit just off of this map to the south. So again, these new areas that we haven't explored are starting to light up and really give us hope that we're going to find additional, you know, deposits. You can see that resource. One thing I like to say is you want to compare apples to apples. And so when we're talking about open pit heap leach mining, you want to compare it to the other open pit heap leach operations in the area. The average open pit heap leach mine in the state of Sonora operates at about 0.5 gram gold average grade and has nowhere near the amount of silver in it that we're talking about, even with, you know, that 35 grams that you see in the resource. So we've got, you know, if they're at 0.5 gram, we're at 0.8, 0.9, depending on the category. We've got another 0.5 gram gold equivalent of average grade there sitting in silver. So now we're talking about being well over double the grades of the average open pit heap leach mines in the state. So now it's just a matter of adding tonnage. you know, and a lot of those mines start around the tonnage we're at. We obviously, our goal is to sell to one of the major mining companies. So we'd like to add more tonnage and ounces and bring it up in, you know, status that, it, you know, the Agnico Eagles and the, you know, Pan Americans and that of the world have interest in the size of the deposit. So again, we're off to a very good start. That number already will have expanded based on, you know, extending it 300 meters to the south down to the bottom of the arroyo, but and we're looking at targeting and updating this resource at the end of this year. So again, a future catalyst for the company moving forward that always tends to have, you know, positive impacts on the company's share price. I mean, again, you can see here's some pictures of some of the core at El Ruby and from the breccia structure, and then through the microscope, the visible gold that we see. And again, we've always, you know, this project is epithermal in nature, but it's not your traditional Mexican epithermal system. You know, we've got, what we get here is you get high grade gold and silver up high in the system, and then the traditional epithermal model, as you step down, base metals would pick up, precious metals would fall off. But you know, you go down 300 meters at El Ruby and you're still in high grade gold and silver with virtually no base metals, other than if you get like a chunky piece of sulfide that's been blasted up from depth that's running, you know, with high grade gold, silver, and the base metals. So that has always been interesting to us. And one of the models that we're now working on and why we did that geophysics program that we did last year was that on this type of deposit and similar deposits around the world, the big bonanza grades widths like is going to happen further at depth. And that, in our case, you know, our mineralization has been, or where our resources is in a certain, you know, host rock package in the andesites. We have the rhyolite package below that still is mineralized, but it's a much denser, tighter rock. So you don't get the great grades and widths that you see up in the andesites. But because of that dense and tightness, when those fluids were percolating up through, it'll be the contact below the rhyolites. When the fluids hit that rhyolite package, they'll disperse and create a broad zone of mineralization. And that is what we were looking for and why we did the geophysics program that we did. And so we're going to be targeting that on our next phase of drilling. The geophysics certainly showed a very attractive target down at depth below El Ruby. It also lit up a number of additional targets around the project. You know, here again, you can see our pit. Talking about high grade that's on the resource, these blocks that you see here, and I'll just turn on the pen briefly, but when we're looking at these blocks that you see down below our pit shell, those were running at a very high grade. They weren't enough tonnage there to be included in an underground resource. You certainly, if you were mining it, wouldn't leave them alone, but they were outside of the resource, and those are running at 300 silver and I believe 15 grams gold. So it's a very attractive high grade, and that's where we see the potential for, you know, an underground resource to start being developed on the El Ruby portion of the project. Again, and then as metals prices change, you see all these blocks that were left out of the open pits in the historic area where the terrain isn't as favorable for open pit mining. But as metal prices use up and as you start to mine it, you can also gain a number of ounces in that historic area that will be, all of a sudden will fall, you know, in those smaller starter open pits in Las Huatas and Convergenia areas of the project. I mentioned the 300 meters that we've expanded. That's the right side of the screen here down at the bottom of that arroyo. You can see the topography across the top there. We have filled that in, and that is all mineralized down. At the time, this was cut off as of the resource, but you can see we had a couple of holes down in the bottom there that hit some nice high grades, pink and purples being your best grades on that image. Reds, you know, all of those are very nice grades. So again, that is filled in. Will change the metrics of what the pit looks like moving forward as well. Metallurgy is another very important thing on any project. And again, here we can see that across all the grade ranges, the gold is leaching very well, above 90% across all the various grade ranges and samples that we sent. But really important is seeing that low grade silver leach around 76%. So, you know, we saw a half gram gold average grade, but you can see that you can leach that silver out and it's going to be recoverable. So again, a big portion of that silver is going to be very economic in that open pit portion of the deposit. You know, I would envision the higher grade material reporting separately to a secondary circuit. You know, you don't want to be sending kilogram silver, portions of the project out onto a leach pad, but you would want to recover those in a targeted way via a secondary circuit. You know, with that, I think, we can open it up for some questions. I think it's a good overview of the project where it's at. You know, if anyone needs to reach out to us or has additional questions, we can go there. There are additional slides in here if we need to reference them via some questions, but, I think it's a good starting point to open up the discussion.
Great. Thank you so much, Steve. So for everyone on the line, just a reminder, the chat function is open, so please submit any questions that you might have. We have a couple that have come in. So we'll start with, how will the team be prioritizing its assets given the pending Canasil acquisition?
Yeah, so I mean, like I said, our priority is always going to be La Virginia, or is certainly La Virginia right now, based on the success what we've had. It's by far the largest and most developed project, and we see a ton of upside potential on that portion of the project. So that the bulk of any money that's going to be spent is still going to be spent on La Virginia. That being said, when we resume a drill program, I would like to have a reconnaissance rig that goes and starts testing, our, what we identify as our best targets. I would envision that starting on Nora, following up on that discovery, and then Esperanza probably also being a priority. But again, as we acquire those assets and start negotiating, we may decide to option Esperanza or option some of these other assets as well. So that'll also could, dictate where we're focused. But we've always really liked Nora, and that's definitely been something we would want to focus on.
Would you folks want to spin out or sell anything that's now deemed non-core?
Yeah, I mean, certainly the Canadian assets to me are a no-brainer. That in a good market, those would be, as a package, very attractive for a new company. So whether we option that to someone who would like to start with those, or already has Canadian assets and wants to build up their portfolio, those would be the two, I think, avenues for the Canadian vehicles for sure, would be to either option them directly out, or when the market conditions are right, to spin that into a new vehicle, and shareholders of Silver Viper would get a free share in a new company based on that spin out. We've seen a lot of value with that in the past. We did it with Orex, spinning out the Barcellay shares and creating Barcellay Minerals. So it's definitely a vehicle that I think should be attractive to shareholders, and that they have the potential to gain, another share of another company. And oftentimes when you do that, you end up with, a combined share price that's much higher than before you started.
Mm-hmm. Okay. Should investors expect a resource update from La Virginia at any point this year?
Yeah, I mean, as long as we get drilling and going, we're targeting a resource update by the end of the year, towards the end of the year. So worst case, maybe, and depending how long an independent takes, we're going to be looking at maybe the Q1, but ideally we'd like to get out by the end of the year. Okay.
Nathan just put something in the chat here. What is Silver Viper's current cash position?
Yeah, we're somewhere under $1 million right now. We are, in the full disclosure, we are in the middle of doing that raise as we discussed. And basically we want to do that raise, hopefully, as we move forward and close the deal, if the share price is in a better position. But we would like to do a larger raise on the back end of the closing to fund the exploration on both, the Canasil assets and a ramped up program at Silver Viper on La Virginia. So, we hit a point there in this market that we've been in now for the last year, where on the back end of that geophysics and the results warranted that we would be adding rigs and increasing to, 3 or 4 rigs on the project. And instead we paused drilling. So it's kind of backwards. We want it to preserve cash. So again, we want to get back to that and get to where, we're going to have very steady news flow and just, constant results every couple of weeks as we, like say, expand Ruby, make new discoveries on the project. And in the case of with Canasil assets, make some additional announcements on those key assets that we would start exploring on right away.
Okay. What is your expected cost per meter to drill?
Yeah, in Mexico, we, maybe with inflation, if we do a new contract, it might be up slightly on some fuel cost increases, but we are around 150 US all in a meter, including assays, maybe 160, 170 if we did a new contract now, just on cost and inflation, everything that's gone around. That has been some of the cheapest drilling that we've done amongst our companies around the world. In our case, you don't have, like when we operate in the triangle, you don't have a helicopter that's moving the rig, from spot to spot. That man-portable rig moves around very easily all over the area. So again, it's very easy setup. Your mobilization costs are low. In the case we use, Globe Explorer has been great for us in Mexico, and they're based in Hermosillo. World-class operation, but if the rig is down, it's normally back up and running in hours because they can get parts to us very quickly. So yeah, we've been very happy with our drilling company, but we're around, say, 150, 160 US all in a meter.
Do you have an exploration budget for the year that you're keeping in mind through all this?
I mean, again, a lot will depend on share price and the amount of capital that we raise. We've always, I don't like to say we're doing 30,000 meters and that's it, and that's the budget for the year. As in exploration, a lot of it is dependent on results and what you're hitting. If we make multiple new discoveries and start delineating, resources at other targets, well, then the program should be ramped up. I think our starting program, when we start back, we'll probably say we're going to do at least 10,000 meters, but with the expectations that that would grow, you know, quickly as we move forward and have success.
Okay. Another question from the chat here. Do you have a cost per ounce so far that you can share with us?
I don't know that number off the top of my head. It's not that high.
Sorry, you don't have a more direct answer, but
yeah, no, I mean, we've got, if you go on equivalents, we've got 700,000 gold equivalent ounces. We've probably spent around $10 million to date on the project.
Okay.
Yeah.
To what depth is the drilling expected to be?
Yeah, so I mean, that varies by what type of drilling we're talking about. There's going to be some deeper holes targeting that body at depth, and those might be, you know, 600-700 meter long holes. Maybe if we really push it, you might get up to like 900 meters on a hole there. But bulk of our drilling at El Ruby sits in the first 300 meters, right from surface. The reconnaissance drilling on the other targets would be, you know, probably shorter. You're probably talking about 150, 200 meter long holes until you really start to get an idea and a feel for the deposits in those areas.
Okay. So we've talked about La Virginia, a little bit of El Ruby. What about Nora? What targets have the most potential there?
The Candy vein. The Candy vein is very attractive on that project, but there's a number of different veins, you know, that following up, and it's open. I mean, from I mean, like you said, only 3,200 meters have been drilled on that project so far, and a lot of the discoveries and the stuff that they found is open in all directions, so they haven't cut off anywhere. So, but we would be going back into all the different veins with the reconnaissance rig, one, to make the data our own, but we don't tend to do infill. Even if we do that, you know, we'll step in and do a step out from a result that they have, and make sure everything that we're doing is, you know, expansion in nature.
Okay, that's all good to know. From a higher level, are there other catalysts that investors should look forward to this year?
I mean, on a higher level, I mean, I hope that we continue to see gold and silver run. Obviously, as they break out, it's great for the whole sector. You know, I mean, I think from what we've discussed, there's a pretty catalyst rich year. If you're talking about a resource, potential for new discoveries and acquisition, you know, potential from hopefully a strategic investment from one of the other companies. There's a lot in all of that of potential for catalysts. But, you know, obviously if gold and silver break out and start hitting new highs, or at least in the case, you know, gold has already done that once and is pushing close to that. But if silver, you know, pushes and sustains above $30, I mean, I think that's a key number in the silver space here. I mean, I've lived in the industry and I'm pretty focused on our companies, but I've talked to enough people and listened. There's very, very few companies that have even the silver exposure that we do in quality jurisdictions. I mean, you're talking about less than 10 in this industry that have a real project in a real jurisdiction, and you get into a better silver market. You know, we've already got silver being produced at a deficit to, you know, being consumed. There's a deficit there to what's being consumed versus what's being produced. And there's a lot of pressure on, you know, those mining companies to replace their reserves, especially on the silver side. And you look at the silver producers right now, and essentially they're gold companies. You know, the Pan American Silver is number 2 silver producer in the world that's supposed to be a silver company, and over 70% of their production now is in gold. You know, and that's what a lot of these silver companies, the mid-tiers, the Endeavors, the First Majestics, you know, like they're more and more production year over year for them is coming from the gold side than it is from the silver. And it's because silver is harder and harder to find. You know, it's being produced at a 9-to-1 ratio, but it's trading at a, you know, 80-to-1 ratio to gold. And that's going to change. And, you know, what's transitioning in silver versus what it's been in past cycles is the industrial use of silver. You know, it's always going to have its monetary side, but now with the, you know, the green movement and the electric cars and solar panels and various uses and the infrastructure that's needed to support all of these, your silver usage is going up, and you don't have while you've got a production that's going down. And so the price has to run because one of the things that's going to happen if you're going to bring any new assets on is you're going to need to bring, you know, the mediocre to subpar assets into production that have, you know, resources in silver, but aren't economic even close at these prices. And so again, I mean, I think it's just a ticking time bomb right now, especially on the silver side of it. You know, the gains are going to be incredible through the next cycle.
Okay. All very good, you know, good market outlook, and, you know, yeah, hopefully there are lots of catalysts for the Silver Viper. So we have the last question here from Patrick. What's the use of the proceeds for this raise? Can you comment on that?
Part of it is towards the transaction. You know, we have to, There is a bit of debt in Canasil that needs to be, you know, on the project, some taxes owing and various things, and then the cost of the transaction, you know, going through, and then general working capital, and you know, continuing to map and sample and get a drill rig up and running. But the bulk of the money that will fund the next drill program will be from a raise post closing of the transaction.
Okay. Well, that's great. That's all the questions that have come in through the chat. I don't see any new ones. So I think at that point we can wrap up for today. Thank you so much, Steve, for joining us and being part of the webinar, and to all the folks that are on the line and have participated in the questions too. Just a reminder to everybody, replays for the webinar and all of our webinars are posted on our website. So keep an eye open for that if you want to come back to anything that we spoke about today. Tomorrow, our webinar series is actually continuing. So Taylor Combaluzier is going to sit down with the CEO of EV Nickel, Sean Sampson, and that's happening at 11 a.m. Eastern time. So make sure you tune in and register for that. You can always head over to redcloudfs.com to view the webinar schedule, all of our exclusive content. Head over to RCTV and our podcast episode listings as well, and details for our upcoming pre-PDAC conference, and that's happening in Toronto this coming March. So all the details are in one easy spot for you guys to reference and register. So that's it for today, and we'll see everyone online next time.